One of the most significant years for blockchain to receive attention has been 2025. Nowadays, the technology underlying cryptocurrency has somewhat made its way into the mainstream media. And even if we are beginning to see it, I believe that the most crucial thing to pay attention to right now is what the major participants in our conventional financial system are doing. The main thing we're looking at is how legacy players in the TradFi space are now beginning to shift into a 24/5 environment. Eventually, it will be a 24/7 environment. Earlier this year, Nasdaq, one of the biggest players in TradFi, announced that they were moving to 24/5. This goes all the way back to March of this year when I kind of went behind the scenes because the market was selling off in a huge way and nobody really cared about what was going on. What we're looking at here is how they're doing this without using blockchain or cryptocurrency, and that's precisely the point at which we're beginning to see the larger picture. They require this new technology. They require cryptocurrency. Blockchain is necessary for them. The Nasdaq recently provided us with an update on this, extending back to August of this year, which makes it amusing. And this is what we got. When exchanges are closed, trading expenses soar. Investors stand to gain as Nasdaq spearheads the push for trading that is open 24 hours a day, 7 days a week. Studies reveal that off-hour trading costs are 3 to 6 times higher than during regular trading hours due to the existing trading days limitations. Thus, once more, they remain committed to this. We now know that this will take place in 2026. We are aware that the Nasdaq is totally committed to switching to 24/5 trading in 2026. But how are they accomplishing this? We have been discussing some of the relationships that exist between the Nasdaq and important companies, like Ripple. And this, in my opinion, is when the main links begin to emerge. Before we discuss the linkages to Ripple, let's quickly go back to September. In September, the DTCC and Nasdaq both announced that they would be switching to 24/5 trading. The evolution of the financial market structure from T+1 to 24/5 trading and digital assets was covered in this interview with Nasdaq. Again, utilizing digital asset technology is the only way to accomplish 24/5. Nasdaq is also aware of this. This was shared by Nasdaq, which was recently at Ripple Swell. The ecosystem of digital assets is reaching a turning point. Adina Friedman, chair and CEO of Nasdaq, recently spoke with Monica Long, president of Ripple, at Ripple Solace 2025 about using the potential of the digital asset ecosystem to improve the world financial system. Okay, so what's strange about this is that the official Nasdaq account is sharing a picture from Ripple Swell, in which the Nasdaq chair and CEO are seated just next to the Ripple president. Additionally, Adina Friedman discusses how to modernize global finance in the future and how to maximize the potential of digital assets to improve the global financial system. Thus, we can see how Nasdaq is accomplishing 24/5 trading. They are using both the technology and the actual digital assets. The amusing thing about this, in my opinion, is that Ripple has been firmly committed to making significant acquisitions and expanding the Internet of Value, which is precisely what this is in terms of the 24/5 shift. The Internet of Value will undoubtedly be available around the clock, but it is also altering the global flow of money. And that might even apply to stocks, the way they move, and the way real estate trades. All of this is made possible by DLT and stablecoin projects. Now, if we go back to November 30th, which was not too long ago, we can see that Nasdaq prioritizes tokenized stocks. The head of Nasdaq's cryptocurrency division says the company is working as quickly as possible to obtain SEC approval for trading tokenized stocks. This would enable direct trading of tokenized shares of publicly traded corporations on Nasdaq by investors. By the way, back in September, Adina Friedman claimed that Nasdaq had submitted a tokenization application to the US SEC. This is enormous. Pay close attention. To tell folks what you believe we ought to do? Yes. Yes. All right. We therefore said this morning that we would be introducing tokenization into our marketplaces, ensuring that tokenized stocks are traded on the market, that is, in the core markets, not in a side sleeve. The ultimate objective, or is it today? Equities just let it rip all the time, 24/7, 365. I believe that's the way we're all going. A few months ago, we made the announcement that we would be switching to 24 or 5. That's how we're going. So it's not Saturday and Sunday? Not yet for stocks. We're walking because we believe we must, before to our run. Yes, I believe that the U.S. equity markets have made significant progress toward reaching 24.5. Furthermore, if we can incorporate tokenization into the markets as well, it will enable us to consider simplifying post-trade processing and modernizing aspects of the markets that have a lot of friction. We are both extremely scaled and extremely robust. For example, we received 95 billion communications in our systems today. Additionally, the median return time from order to trade was 20 microseconds. Approximately 3 million communications are processed per second. It is enormously scaled. However, after that trade takes place, a new procedure takes place. Then, as is well known, tokenization excels in the post-trade procedure. Additionally, controlling financial flows throughout the global ecosystem, reducing friction, and introducing that capability into the market are all important. I'm sure of your response to this. There is this well-known curve that goes like this. You have this early period of lunacy, followed by a period of disillusionment, and then you develop through it. Does it appear that cryptocurrency is a blockchain? It seems like there are actual businesses undertaking actual steady coin activities now that it's finally genuine. I really want to draw attention to what Sachs accomplished with the Genius Act because, in all honesty, having regulators who wish to work on bringing it into the mainstream and want to establish the rules of the road is such a refreshing thing because, in my opinion, it enables us all to understand how we can operate within a world where there are tenets of investor protection. There will be things we can and cannot do with the technology, but it will also be crucial to be forward-thinking and forward-leaning in how the technology is used. We are therefore thrilled that regulations from both the traditional and digital industries are finally convergent. How can we integrate everything to frank market advancement? And we are ecstatic about that. Adina Freeman is stating, hey, with regulatory changes and things happening, we're starting to see the shift towards tokenizing stocks, tokenizing things, bringing everything on chain in response to what the NASDAQ is saying. And even going back to November 30th, they are beginning to prioritize this. However, why wouldn't they? Correct? Regulations are starting to take shape. Around the world, laws are beginning to be passed. Our entire financial system is currently undergoing transformation. However, what about the DTCC? Because once more, if you go back and look at this video's title, I hope this video was enjoyable to all of you. Don't forget to like, subscribe, and turn on notifications for more free stuff. Please feel free to join the free Discord description below and follow me on Twitter. Having stated that, folks, have a good time viewing.